Now they're looking back, what were the biggest moments in gold trading in 2012?
Well, Greg, it appears to me that it was basically a continuous moment. I would define 2012 as the year of 80-40 gold, whereas the about 80% of the sentiment and price movements were driven by QE expectations and QE disappointments. And then the 40, referring to the 40% that the physical market is made up by China and India, which saw ebbing demand on both fronts. But I think the overriding theme was still one and the same, and that was the Fed's monetary policy, and that kept gold prices in check as well as from collapsing. So I think looking forward, we'll have to look roughly at the same factor as the principal driver for next year, plus a few others.
Does Ben Bernanke have the bullets left? If it was all about Ben Bernanke in 2012, what can he do in 2013?
Well, we cannot underestimate the firepower of the Fed or its inventiveness if it comes down to having to do something. But I think looking forward, I think the gold bugs have realized that a couple of things are not happening and haven't happened and probably won't happen, i.e. the dollar collapsing, hyperinflation making an appearance, and of course, gold to the moon. So what they will have to look for next year is whether or not Bernanke makes any further hints as to an eventual exit from monetary accommodation, how the U.S. economy progresses. Before, after this fiscal cliff, we have a lot of jockeying for position, but I think that'll come to pass soon. And most importantly, investment demand, will it sustain the pace in order to absorb the surplus in the gold market? And of course, at that point, will China and India step up and fill the gap that they weren't able to fill this year on the physical front?